This is not financial advice. Please do your own research. Dreamers, I asked the question, if you could buy one, which would it be? With over 602 votes, that's why you guys need to go ahead, like and subscribe. It's completely free, so you don't miss out on any crucial information. Hit that thumbs up button, hit that subscribe button. It really helps out this channel more than you guys can possibly even imagine. But yeah, I asked and 602 voted with growth stocks, dividend stocks, ETFs, and speculative play. And coming in first with 43% would be dividend stocks. Now, dividend stocks, I'm gonna give you guys two plays. The first one is monthly dividend stocks. These are dividend stocks that will pay you dividends every single month. If you don't know what dividends are, that is when you are investing inside of a company and that company is saying, hey, investor, thank you for investing inside of our company. Here's a little dividend paycheck that you're going to receive every single quarter or every single month. In this case, it's a monthly dividend stock. So you will receive some type of income every single month deposited straight inside of your brokerage account, and you could do whatever with it that you please. I personally reinvest my own dividends back inside the dividend stock, so the snowball effect could start to take place and I make more money in dividends the following month. But you could do with it. There's a lot of people living off their dividends, going on vacations with their dividends, paying their bills, car note, electricity bill, gas, anything with their dividends. So these companies are saying, hey, thank you for investing inside our companies. This is kind of how they attract investors to invest inside the dividends. So I'm going to show you guys a monthly paying dividend stock that I really like. And then I'm going to show you guys a dividend king. A dividend king is a company that's inside of these S&P 500, right? That means it's a good quality company. And they've been increasing their dividends not only for the last 5 years, 10 years, 15 years, 25 years, 30 years, but they've been increasing their dividends every single year for the last 50 years. That's I ran some numbers on this channel, right? And that's longer than most of us watching this video has been allowed. So this company I'm gonna show you guys in today's video has been increasing their dividend payment every single year for the last 50 years. So the first one I'm gonna show you guys is ticker symbol O. Now, Realty Income right here is at $58.48. If we scroll down to their dividends, they've been increasing their dividends every single year for the last 31 years, making them dividend aristocrats, which is not bad at all. But the reason a lot of people love ticker symbol O is because they have a 5.53% dividend yield, which is really good. A good dividend yield is anywhere between 2 to 3%. Ticker symbol O has a 5% dividend yield. Now, dreamers, listen up. The higher the dividend yield, the less the company have to invest back inside of their portfolio to actually grow their company. So if they're paying out a 10, 15, 16% dividend yield, they're using most of their income and giving it back to their investors. So they're not going to have a lot of money left over to invest back inside the company to watch it grow. So although, let's for example take a quick look at Apple, AAPL. Apple is an amazing company. They have a pretty low dividend yield at 0.37% because they take most of their money and invest it back into their company, which will consider this a growth stock, which we're going to talk about next. But let's go back to O, and you guys can see they have a 5.53% dividend yield, and they pay out their dividends every single month. So 12 times a year, for every share that you own of a ticker symbol O, you will receive $3.23 that year. And eventually over time, if you're compounding it and reinvesting your dividends back into Realty Income, then you could eventually be able to retire and live off of your dividend income alone. Now, the next one I'm going to show you guys is Johnson & Johnson. Now, Johnson & Johnson is a dividend king. Now, let me show you how they're a dividend king. Not only have they been increasing their dividends for 50 years, but they've been increasing their dividends for the last 63 years. 63 years. Now, they have a dividend yield that's half of ticker symbol O, and they only pay out their dividends every single quarter. It really doesn't matter. You're going to make the same money at the end of the year, but they have half of the percent of ticker symbol O. But with 63 years of increased dividend growth, that means they've been able to increase their dividends through a pandemic, a recession, depression, all kinds of crazy stuff that going on. Trade wars, tariff wars, everything. They've been able to increase their dividends every single year for the last 63 years. That means they're a good quality company. And if we take a good look at Johnson & Johnson right here, you guys can see that I highly suggest that when you're looking at dividend kings, since they don't grow as much, usually don't grow as much, you want to pick up good quality dividend kings at a dip. So right here inside of the Patreon, the Discord, we was able to pick up Johnson & Johnson down here at this bottom, down here at this bottom, down here at this bottom. Pretty much we had this trend line. Whenever Johnson & Johnson came and hit this bottom line, we invested a little bit inside Johnson, and then when it finally took off, we just sat back and let this thing ride on up all the way to $201. So we was just sitting back, let that thing ride, collecting the dividends every single quarter from Johnson & Johnson. So there you go. We had ticker symbol O for our monthly dividend income, and then we had Johnson & Johnson for our dividend king income, which brings us to our second one. We got growth stocks and ETF stocks, which is kind of the same, but let's growth stock hit 25%, ETFs hit 29%. But let's talk about growth stocks right quick, because one of the easiest ways that I got started inside the stock market was I received some free shares of growth stocks, and that helped me in the beginning journey of my investing career tenfold. And right now, guys, I would like to thank today's sponsor of today's video, Moomoo, because right now, if you sign up and have a qualified deposit for first-time users, you can receive up to $1,000 in NVIDIA shares. Yes, NVIDIA shares, which is completely insane. And also on top of that, with your uninvested cash, you can receive 8.1 cash sweep interest on your uninvested cash. So cash that's just sitting inside of your portfolio, you can receive up to 8.1% cash sweep interest on that. Also with Moomoo, you'll have access to the many free tools that you'll be able to use, their early market hours, their aftermarket hours, and you'll have $0 commissions. This is your one-stop app for trading stocks, options, buying ETFs. If you wanted to swing trade, day trade, or just be a long-term investor, this is your one-stop shop app that you can use. Moomoo will allow you to invest in domestic and international stocks. So if you guys do want to trade smarter and not harder, I'm gonna leave a link to Moomoo in the pinned comment section, and also down in the description. You can click that, sign up using my special link that they gave to me to give to you guys. That give you a little bonus if you use my special link that I'm providing for you guys down in the description. Once again, I would like to thank today's sponsor of this video, Moomoo. All right, dreamers, now that we're back, we're talking about growth stocks. If you could get up to $1,000 worth of NVIDIA, that is one of the most amazing growth stocks there is out there right now. But I dropped a video on Monday that you guys could click right here to go check out. That is to Apple. I've been buying Apple every single day for the last 2 years, 2+ years. And you guys could go check out exactly how much I made from that. Now, I love Apple as a growth company. I'm not sure how the growth stocks did not outperform the dividend stocks right here. I guess this was a dividend channel at one point, but listen, when you're trying to grow your account, nothing beats a good quality growth stocks. Now, what I like to look for, I'm gonna give you guys my tips and tricks right here. So I like to invest inside companies that's been growing every single year for the last 20 years. So for this example, I'm going to say Apple. The second thing I like to look for, I like to look for companies that's been growing every single year and also have been doing stock buybacks. Now, stock buyback, I'm going to pick Microsoft, because they have some of the biggest stock buybacks in the industry. Last time they had a stock buyback of $60 billion buying back their shares. That means supplying them in. Is there less shares out there? It makes the shares that you own more valuable. So when Microsoft they're not buying back millions of dollars worth of shares, they're buying back billions of dollars worth of shares. They had a $60 billion stock buyback back in 2024. So when I see a good quality company announce a stock buyback like that, I like to go in and buy up a couple of shares. So this is Microsoft over the last 5 years. You guys can see that they're up 125%. That's around 25% every single year for the last 5 years. Over the last 10 years, they're up 79%. That's on average they're up 793%. That's on average 79% per year, which is that is the kind of growth I'm talking about. You're not going to get that from your dividend stocks, because dividends take so much more of their money and invest and give it back to investors other than investing inside of the company like Microsoft do, to be able to grow, to have a growth rate of 25% per year, which is insane. So I like Apple because they've been growing every single year for the last 30 years. I like Microsoft because they've have stock buybacks. Whenever they announce a stock buyback of billions of dollars, you already know what I'm doing. If you guys want to know exactly what I'm doing, listen, I'm going to give you the third one right quick. The third one is when a good quality company has a stock split. One of the most recent stock splits would be Netflix. They had a 10-to-1 stock split. I kind of called that out early. That's what I do, you know what I'm saying? I let everybody inside the Patreon, I let everyone inside of my community know. If you do want to join the Patreon, I'm gonna leave a link to it right here. I'm gonna leave a special code in the description to give this to you guys for $6 off, for half off. So it'll just be $6 for your month. And in here, you guys can have access to every single time I buy and sell a stock. It's like when I was calling out Netflix, you guys can see I'm up 200% on Netflix. I've been telling everybody about that for a while. I was like, hey, listen, Netflix gonna have a stock split. But anyways, listen, if you guys want to have access to any time I buy and sell a stock, my swing options, my leap options, my day trades, and I have a leap option trader in there, and I have a day trader in there that posts that option trades every single day. If you want to be a part of that, you guys can skip out on one coffee per month. You can skip out on one coffee per month, and it'll be for $6. It's $6 worth investing inside of yourself. I don't know, you know what I'm saying? We're leading inside into 2026. Are you prepared for 2026 to invest inside yourself finally and take your first steps to investing? You join one of the best communities on YouTube. You can join one of the best communities when it comes to investing. If you do want to join the Dream Team, that's where we hold our Zoom calls every single Sunday, where I teach the wheel strategy. Now, the wheel strategy is a little difficult, and it took me a while to learn, and I'm teaching you guys everything that I learned about the wheel strategy. That one is half off as well, but it's taking off one coffee per month. Taking that off, investing $6 into yourself. You got to ask yourself, is it worth it? Sometimes you got to take a chance. But there's a lot of people inside the community that's been taking my trades, my other pro member trades in there. So if you guys do want to check that out, I'm going to have a QR code right here, a link in the description, and a link in the pinned comment section as well. So anyways, back to the stock splits. Whenever a company has a good stock split, like 2-to-1, 3-to-1, 4-to-1, like Apple had a stock split, they're taking off up 25% every single year. Tesla had a stock split, they're up. Tesla do crazy numbers. When a good quality company have a forward stock split, that means they usually outperform the S&P 500 by around 6 or 8% the following year after they have a stock split. Not every single time, but statistically showing it becomes more affordable. More retail investors start investing to them, and they usually outperform the S&P 500 by a couple of percent that year. So that is my strategy when it comes to buying growth stocks. Now, the one after that will be ETF stocks. I'm going to give you guys 3. All right, so the first one is going to be the S&P 500. I like VOO because the expense ratio is cheaper than SPY. The SPY is the S&P 500. If you guys buy VOO, let's check this out right quick. So we're going to type in VOO. If we go to their holdings, you guys can see that they're heavy. That 37% of their holdings is in technology. And if we come down, they have 507 different companies inside of their portfolio. They got Nvidia, Apple, Microsoft, Amazon, and it shows you the percentage right here. Their top 3 holdings is in technology, financials, consumer, communication, health, and industrials. So the S&P 500 is the market. So if I had to pick an ETF, it'd be VOO. The one after that I would choose would be QQQ. Now, QQQ is it's the NASDAQ. It's heavily invested inside of technology companies. Now, as you guys can see this pie chart right here, 54% of it is inside of technology. And then it goes communication, consumer, health, consumer, and then industrials. But most of their holdings is in Nvidia, Apple, Microsoft, Broadcom, Amazon, Google, Tesla, Meta. And they have 102 different companies inside their portfolio. So they don't have 500, they have 102. That means they're not as diverse. When technology is doing good, QQQ is going to take off. When technology is doing bad, QQQ is going to have a pull back. So it's a little bit more riskier than the S&P 500. S&P 500 got 500 companies. QQQ is heavily inside the technology sector and got 100 companies. And then the last one, just going to throw this one out there, the dividend ETF, which would be SCHD. Let's take a quick look at SCHD. Now, SCHD, they're very diverse inside of each sector, but they're not heavily invested inside the technology sector, which slows down that growth. But if we look at their dividends, we scroll down, they have a 3.7% dividend yield with a 10.38% growth rate over the last 5 years. Every single year, they grow around 10.38%. And they've been increasing their dividend payments every single year for the last 13 years. So when we're looking at the ETFs, I got VOO, QQQ, and SCHD. And then the last one for my scary money don't make no money people, 2% has hit that speculative play. That means, look, they're trying to risk it all. They're going to put in $100 on this one stock, and then they're going to put in $100 on this worst stock, and hopefully turn it to $1,000, $2,000, $3,000 in the future. So one of my speculative plays right now, of course, you got the AI boom. You can invest inside these AI companies, or you can invest inside of Google, Meta, Microsoft. All of these are major companies that that's investing inside the S&P 500. But some of my speculative plays that I like that I could show you guys right quick. Some of my speculative plays. I like sound. Nvidia invest a lot of money into sound. If it blows up eventually over time, then you can make a lot of money from sound. One time they had an all-time high of around $25. Right now they're sitting at around $12. Another company would be, I really like Lemonade, LMND. Now, Lemonade is like an insurance company, but now they're starting to implement some AI inside of their insurances. It's not an AI company at all, but yeah, I've been telling everyone about Lemonade for the longest inside of the community. Let me show you. I think I'd be lying. All right, so this is Lemonade. I'm up 164%, up $7,893. So I've been telling everyone about Lemonade. I told you I don't be lying. If y'all want them plays, you know where to find me. But anyway, I like Lemonade. Actually, it's kind of too late to get in on Lemonade as speculative play. They've been doing really, really good. Bull kind of follows Robinhood. This is one of the speculative plays right here. If Bull could eventually do the same thing that Robinhood did. So this is Bull, had a big run up all the way up to what, $70, $80, had this pullback. It went below, traded sideways for some time now. Now we're just waiting for Bull to break above this $13, $14, $15 price point to eventually have that same push up that Robinhood did, HOOD. So Robinhood had that same thing. So Robinhood came out, went all the way up to around $80, had this big pullback, traded sideways for a couple years, and then eventually started to take off again. So if Bull could do the same thing that Robinhood did, that is one of my speculative plays right there. I'm going to hold on to them for the next 5, 6, 7 years. If they hit, they hit. If they don't, it's just a speculative play. Most of my money is going inside of good quality companies, good ETFs, and some dividend stocks. So if you didn't vote on that, I highly suggest that you guys subscribe to the channel. Please subscribe to the channel. I can't stress how much that helps out a YouTube content creator just by hitting a subscribe button and hitting the thumbs up button or sharing it with a friend. But let me know which one is your favorite down in the comment section. If you can only choose one, would it be a speculative play to where you invested little, make a lot? Would it be growth stocks to where you invest, invest inside good quality companies? Would it be ETF to where you invest in spread and be very diverse, but don't make as much as growth stocks? Or would it be dividend stocks to where you receive dividend income every single month or every single quarter? Let me know which one is your favorite down in the comment section. Can't wait to see what you guys say. Other than that, y'all, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.
This video is for educational and entertainment purposes only. It does not constitute financial advice. All investments are by risk. Do your research. This is not licensed financial advisor. Any third party considering files under the fair use commentary and analysis. Please consult with a licensed financial advisor or professional in your area before making investment decisions.